Welcome back to another video here on Financial Friends. Today we're going to be talking everything Target. So if you are ready for that, if you are going to be interested in that, this video is for you. If you are a member or shopper at Target, customer, team member, or investor in Target, this video is going to be very, very interesting to you. And I'm very excited to talk about it as both a consumer of Target as well as an investor in Target. I'd like to see them succeed. This is going to be a little bit of a bullish sort of minded thing. So if you're a Target bear or you don't think the company will perform well, you might not enjoy this video. But we're really going to break everything down from an honest viewpoint, be as middle as I can. Obviously, like I said, I want them to succeed. So that bias is going to be a little bit there. And also with money on the line, I'm an investor, so I'd love to see them succeed. So without further ado, we're going to go ahead and break a ton of information down. This video is going to be long. Not all of the information is going to be absolutely 100% to the actual T. So if you do want all of the exact information, the correct interpretations, etc., go ahead and visit the Target website. Obviously, after this video, some of my personal sort of opinion is going to be mixed in with this, as well as obviously my completely 100% honest analysis of everything here. So go to investors.target.com, click on the investors tab, or if you're on like the bullseye view, well, here. This is corporate.com. Then you want to go to the investors tab, go down here to events and presentations. And this was the webcast I was tuned into live. I went ahead and took screenshots on my iPad before this infographic or, these slides were released to the public. So I was live watching this and listening to it as it unfolded. So without further ado, let's just hop right into it. Let's go ahead and break everything down. So here it is, the 2022 community meeting. My breakdown, my thoughts, let's get into it. So first and foremost, the full 2021 year highlights for Target. This was an infographic put out by them. I'm going to move myself a bit out of the way. Here are their highlights. 12.7% comparable sales, 11% boost in store comparable sales, a 21% boost in digital comparable sales. Over the course of 2021, they had a 14.10 GAAP EPS and an adjusted EPS of $13.56. Financial related things, very, very strong. Target performed very well over the past 2 years. The pandemic has brought in an absolute massive wave of new customers, new exposure, and boosted growth. And that's going to be a key concept as we continue to move through this analysis, is how are they going to stack up to that in the future? How are they going to keep growing? And I think you're going to understand why and how, and really that what Target has felt they've been able to do. This continued momentum, you can see here, $106 billion in total revenue, up 35% since 2019. The sales have grown $27 billion since 2019, a $14 billion increase from the stores and a $13 billion increase from digital. Overall traffic up 12.3%. Their own brand sales are up 18% or $30 billion. They're seeing double-digit comp sales across 5 of their categories, which really here, this is pretty much their main categories: apparel, food and beverage, hardlines, home, essential, and beauty. A key statistic that will come up even further into the video, 95% of their total sales, both physical and digital, were fulfilled by stores. Key component there. Continuing to move forward, they're seeing insane growth in their drive up, shipped, and order pickup, which drive up is obviously curbside, shipped is a home delivery platform, and order pickup is obviously, place the order at home, go to the store, drive, and pick it up. They've continued to deepen their relationships with big major brands like Ulta, Apple, Starbucks, Disney, Levi, etc. And they're opening new brands. Obviously, you could see here Bright Room, Kindful, Favorite Day, Mondo Llama. They have a ton of new brands that are constantly coming out. They're innovating. They're making high quality store-owned products or brand-owned products. Now, continuing to move forward, this is a very, very key concept in my personal opinion. And this was really the breakdown of everything. And if you get anything from this video, know this. Target and their board and their directors and their CEOs and everybody who is a part of the company, they think that Target is a growth company. Say that again. They think Target is a growth company. They have things to back it up. They have a plan for the future, and they're going to execute, and they've shown that so far they have been executing on those plans to be a growth company. Okay? This is the theme of the whole entire presentation, the whole entire video, everything. All right? I think this is interesting, and I think this is extremely important as an investor, and it makes me feel confident as an investor because they have paid 51 consecutive years of dividends leading up to this point, and they still consider themselves a growth company. Now, that's fantastic to consider yourself a growth company, to call yourself a growth company, but for the next 2.5 hours, all the members of Target did was back up this statement and show how it is going to be executed. So this video is broken down into a few different segments of how they plan and how, I kind of perceive their plan to become and to be a growth company. And the first one is Roundel. Now, what is Roundel? Roundel is their media platform, okay? So Target owns a media platform. Obviously, it's called Roundel. It's integrated through all of the Target arms or branches, so to speak. And they help companies market their products within Target. And they make money from this. Obviously, these big brands will come to Target, say we'd like to, market our products better through your website, through your app, whatever it might be. And Roundel says, all right, this is how we're going to do that. And they create new advertisements. They give them guest statistics and information and data and allow them to make the best choices to advertise on Target's website, on their app, and in their stores. This has generated $1 billion over it's an estimated number in value for Target, and they continue to assume that this will grow. This is important, and the reason this is important is just like any other massive brand, right? Apple, Facebook, Google, these big tech companies, they are in the business of giving things away for free. All Target is doing is existing. They're already going to exist. Their business is going to exist. But what they've done is they've created a potential revenue stream over here to bring in big companies with big money, to pay them money to help their advertising. And it's a win-win-win. I, as the consumer, get a product that is better marketed and better targeted towards me. Target makes money from the brand, and the brand gets a boost in sales. And you can see that here. Clorox went ahead and they took advantage of this. They received a 40% higher return on their ad spend money for Clorox and a 25% increase in their customer retention. So people were going back again to purchase a Clorox brand. Now, this is good for many reasons because if you were a Target shopper and you were shopping at Target no matter what, if you're going to continue to go back to Target to buy these bags, to buy these trash bags that are advertised here, or to buy any Clorox product, Target is making money. And more than likely, you're going to be buying a set of headphones and buying your groceries and buying other things. And this ad is not only going to benefit Clorox, it's going to benefit Target as you walk through the store and spend $100 to $200 every single time you walk in the doors. And you're also going to be buying Target branded products. So moving forward, stores. I just mentioned you're going to come into stores, or you're going to do the drive up, or you're going to do something. Target believes that stores are the future. The CEO mentioned, look, when I first came into this company, the norm or the good thing to do in retail was to close more locations, cut costs, and save money. Target is not doing this. They are investing in their stores. About 30 new stores per year. And look at how beautiful this building is. Just take a minute to admire the architecture and the simplicity of this building, okay? Beautiful building. But they're going to continue to invest in their stores. And over the last little while, they've been investing in smaller footprint stores, okay? Stores in Chicago, Boston, Denver. My girlfriend lives in a larger college town, and they used a smaller format store and put it in the downtown region of that area, and it is jam-packed with students constantly, and the family members of those students when they're there visiting. So being flexible and being able to put these stores in any location is something that other companies cannot do. You have Myers, you have Kroger's, you have these massive large stores. you don't see small Krogers. There are a few Meijer stores and locations I'm seeing, but do you see any mini Walmarts out there? I personally haven't. And if I haven't, well, then Walmart's not doing a good enough job of getting that information out there because I didn't know about it. So these small footprint stores allow Target to get into areas that other big box stores are not able to do. And that A, gives them a leg up, but B, allows them to generate more revenue in areas that normally you wouldn't be able to. And the fantastic part about these stores is they're not just copy and pasted. They're not just the same format over and over again on the inside, very boring, very mundane. Okay, it's just a small mini Target with less options. They're targeted, right? They don't come into a college town assuming that these students are going to want, all these other products like hoses and things that like normal people in normal urban areas might need. No. They come in with box fans and phone cases and phone chargers and snacks and a bigger focus on drinks, right? They understand what they're actually doing when they move into these locations. They're targeting their assortment and their selection for these regions, and that is crucial. Continuing to move on, these are two stores that they're looking at doing in the near future or that are already planned to be built. You have Charleston, South Carolina, looks like an absolute beautiful location, and right in the thick of it, Times Square, New York. So they mentioned mid-sized stores, and what they had said about these mid-sized stores is for a long while, they were very focused on opening up massive 144,000 square feet locations, these big footprint locations, and then for the past couple of years, they've been focused on getting these smaller ones into place, okay? And what they're going to be focused on moving forward are these mid-sized stores. And there is a reason for that, but this is going to be the focus. Getting into high density areas in larger locations. Again, think of things like a Kroger and a Walmart and a Meijer. Most of the time, these are going to be my three main comparisons, so bear with me as I continue to use them. These three are everywhere, okay? But they take up the biggest store in the region. Target doesn't have to do that. Target can be the biggest store in the region. They could also be the smallest store. But these mid-sized stores are perfect because you can get into strip malls, you can get into outlet malls, you can get into tighter locations, more jam-packed urban people with higher populations, and you will see how they are going to use these stores. So just bear with me on that. You could see them here. Stanford, Connecticut, Minneapolis, Minnesota, Los Angeles, California. And again, I just want to point out the architecture. This is not the same building copy and pasted every single time. In my personal opinion, and from what I've seen, every Walmart looks like the exact same thing. Every Meijer looks the exact same. And every Kroger looks the exact same. They're all just the same building, just copy and pasted over and over again. It's boring. I'm going to be honest. As a consumer, as Gen Z, as someone who's younger, it just is boring. Okay? It is. Look at these beautiful buildings. Take a moment, just appreciate them. They just look nice. They look inviting and welcoming and colorful and bright, and you want to walk into them. Moving forward, they're going to continue to do this even to those boring and mundane locations that are out there with about 200 remodels throughout 2022. I think this design in particular is beautiful. I think this little sort of retro style Target sign is just really cool. I'm not going to spend too much time on this, but it's very cool. They're also going to be redoing the insides of these stores. Now, this is where things become important. I think I talk about this a lot. I'm going to talk about it a lot on public as well if you're from there. The customer experience matters. The way that you feel inside of a Target, it matters. It's important, okay? Because I do my grocery shopping for the most part with my parents and such at Kroger. I don't get a feeling. I don't need to go back to Kroger because it doesn't do anything for me. It is just a building in which the bananas are stored and I walk and I grab them and I leave. I feel different in some Targets, and to some people you might sound off, oh, who cares? It doesn't matter. It does matter. The customers are what funds the revenue of the business. You need them to want to come back. You want to give them a warm, fuzzy feeling inside, and look at this. Beautiful new Ultas remodeled and put inside these new stores. Beautiful Disney attractions essentially inside of these Target stores for the kiddos. You have these beautiful new and much larger, I'll mind you, grocery areas where fresh produce can be bought. This was not something that was in Target a a couple of years ago near me. They've put in a new one since, and it's smaller, but they're going to put in an even larger one into a mass majority of these stores, or as many obviously as they possibly can. Obviously 200 or so of them, space being a factor. And this is going to be a massive focus for them moving forward. Drive up and order pickup specific areas where you can walk right in. You're not in the thick of things, but you can go ahead, grab your order, and walk out. And you're not taking up traffic and parking spots in areas, near customers who are going to be going inside of the actual store. And then a drive-up area, and there's a picture I'll have later, kind of off to the side. This is keeping team members and keeping, these vehicles a lot safer, not taking up space in the parking lot, not backing in and backing out of, high traffic areas. And also team members, it'll keep them a lot closer to the building. That way they're not walking out in snow or the conditions. And even some of them are going to have canopies they talked about. And there was a few pictures, but I didn't take screenshots of them, so that their team members can be protected from the elements. Fantastic. They're thinking of all different corners and angles, safety, ease, the safety of their team, and also obviously, like I mentioned, the people who are doing the pickups as well. Here is a picture I threw in there. I found this just on Google. This is from the corporate website of Target, so you can still find it in the same location that all of the other stuff is located, but they're also going to be putting these in stores, and they already have in some. These sort of Apple hubs, their own dedicated tech areas for technology. This is fantastic, okay? Just the experience matters, the way you feel matters. You go into a Best Buy, you kind of get this very approachable feel where you can walk up to the areas, utilize the phones, talk to people. You don't normally get that when everything's locked up and in a case. They're opening that back up. They're expanding and broadening their technology department within Target. Okay, you might say, oh, okay, cool, they're going to spend a bunch of money. What does this actually mean? Well, it means a 2 to 4% increase in sales within the first year and a 1 to 2% boost the second year. So, for example, if a store does $100 million, it's going to do anywhere from 2 to 4 million extra. And if it does $100 million, again, the second year, it's going to see a 1 to 2% increase there. So another $1 million or $2 million. All of these figures are split in half. So instead of 2, it'll be 1. Instead of 4, it would be 2. If the store does $50 million, which a lot of their stores were mentioned do $50 million in sales. So these are not just marginal increases. They're making this back. I saw a few different stats about like 1.8 million or so dollar upgrades. They're making these things back potentially within the next year and definitely within the next 2 years. So Target is a profitable company as is. These stores are becoming more profitable with a facelift, and that is important. They're not just wasting money on making stores look better. It's providing a better return, and they're getting a return on that investment. This is the major key here to growth moving forward. Okay, so if this is as far as you make it in this video, watch this first. Stores as hubs is the way that Target is going to be utilizing the back of their store locations to fulfill orders. This will allow them to ramp up speed, ramp up production, ramp up their online digital sales, and keep products moving and fast. If you want to walk into a Target, see the whole store, you never think about the warehouse in the back or the big storage area. These storage areas are the hubs of Target. They don't have as many massive distribution centers as, say, Amazon does. But they do have a few, but not as many. What they do have is stores, stock full of inventory. So you might see these people walking around Target as you're shopping. Those are the pickers. Those pickers will bring those things back into the back for the packers, who will then pack up the merchandise for online orders or any orders obviously being shipped. They'll box those orders up. They'll load them up, and normally what would happen is big, UPS trucks or FedEx trucks would back up to these stores, pick up these boxes, and go make those deliveries. That's going to be changing soon. And you could see here, this was a quote, the 95% of Q4 sales were fulfilled by stores. Okay, so 95% of orders were picked, packed, and filled within an already existing Target location, not a massive warehouse or distribution center. But the note on the FedEx or UPS picking it up directly from the stores, that will be changing as well. Part of the technology and innovation, this is my own sort of title, that is happening. Sortation centers will allow Target to roll out next day delivery at scale. In red, it's important. Next day delivery. So instead of these UPS and FedEx trucks coming one time a day, which is the number that was thrown out there, one time a day to the Target locations, Target trucks will come multiple times a day to pick up packages from the back of these stores, right? From their hubs, the stores are the hubs, pick up these packages and deliver them to a nearby sortation center where the packages will be sorted by zip code, by distance they are traveling, and then picked up by either UPS, FedEx, or any other partner that Target has to make the deliveries, or a shipped driver who can come and pick up multiple packages at a time, deliver in some radius. Most of the time it's going to be within a neighborhood, and obviously they're being paid, but those packages will travel that last mile very, very quickly. So let's say you order a product. You live 10 minutes, which a lot of people probably do, live about 10 minutes or so from a Target location. Maybe, okay, let's even say you live an hour. You live an hour from a Target location. You decide not to go into the store. You just order the product online. That product is then picked from that store that's an hour away, driven to a sortation center where it's found that you only live an hour away. It's picked up the next day and driven to your home by a UPS driver. What this allows the company to do is, as they're picking the items from their store, they're bringing them into the back of the store, they're packing these items. Soon as those items are ready, they're now being shipped out to a location where the next stage is delivery. And they're not waiting or piling up in the back of the store and taking up space, and potentially there's no more space and they don't have this and they don't have the capacity. No. 4 to 5 times a day, those packages are being picked up, cleared out, and moved on to the next stage.
I couldn't hear what.
I guess Siri wants to interrupt. They're being picked up, packed, moved, and ready to go back to, the next stage is your doorstep. This is crucial, and I will touch on it more again later, crucial in the race of competition in this digital age. We utilize our phones to order items constantly, especially from Amazon. If there's no perk to ordering on Amazon, if you could just order the item on Target, if you're Target loyal, you want to use your points, you want to use your rewards, you have a gift card, whatever it might be, you can get the same delivery that you can on Amazon. And what's important is as this grows in scale, in these sortation centers, there's I think 2 right now, they're opening up 6 next month and 5 more later this year, and they're looking at keeping that pace for about 4 to 5 years. So, 5, 6, 7, 8 new of these sortation centers every single year. As these continue to be rolled out, scale matters. Prices can be dropped because they're doing more volume. So the more volume they're doing, the more room there is for profit, and so they can drop these prices lower so you're not having to have a $35 minimum for free delivery. This is going to be crucial moving forward because scale matters. So not just next year, not the year after that, but as they continue to build these 3, 4, 5 years out, I'm very excited to see what Target can do in terms of competing against the massive players in the delivery space. Here is their Target app, the flagship Target app. I'm sure a lot of people watching this have utilized it, have seen it, or are aware of it. 2 years ago, this drove 30% of their total digital demand. Today, it drives about 70% of their total digital demand. Right here, this product, this phone right here, the application that I have on it, is driving 70% of online demand. That's fantastic because it's in everybody's pocket. Everybody has a smartphone. And they're bringing these smartphones into stores, scanning items, adding items to their list, checking out, scanning their Target Red card, whatever it might be. But they're also going home, utilizing the app, ordering products online, and it's only going to get easier moving forward to order products online. Continuing to go forward, Target Circle. We all know the rewards program. It's 1% back on everything, and obviously there's special perks, rewards, etc., 5% off on your birthday. We know the deal. Utilizing Target Circle and their rewards program, being able to use Roundel to get customer information and then give you a better ad or a better marketing sort of plan they see an $8 to $10 lift in the promotional size of their baskets. So whenever they give you this, right, save $20 when you spend $100, or $20 off store-wide when you join, or whatever it might be, they're seeing an $8 to $10 lift in the size of someone's basket. So if they're spending 10, they're spending 18. If they're spending $10, they're spending 18 or $20 now. And these ads see a 70% conversion rate versus the normal 40% of just the mass marketed thing. So as they're able to get more specific, they're seeing a higher conversion rate. They're seeing a lift in the size of someone's cart or basket. Growth. This is all about growth. Next up, a huge growth driver for Target, Drive Up. 60% of people that utilize this service are using it again. That is massive. That's not just a number to laugh at. And they're using it again within the same month. So someone used the experience, they enjoyed the experience, and they're going to utilize it again. I used Kroger's personally, didn't like it. I used Target's. You have the app, you put in your information, the person has to scan it, they verify it's you, you pick a spot where you'd like it in the car, the person walks right up to that part of the car, they drop it in for you, it's flawless and it works effortlessly, it's clean, and it's all within the app. I love it. They're ready for you when you get there, okay? And this is only going to get better. Here's an expanded view of that Drive Up section. So instead now of parking in the middle of a parking lot and having their team member walk out and, risk their life being in a parking lot where people are driving all over the place and having to try and spot my car out of all the other ones, they have this dedicated part of the building right off to the side. Now, obviously the footprint, location, size of the building is going to vary, and it's going to matter as to if they can implement this everywhere. But this is, I'm sure, going to be a priority moving forward within each location, trying to find a spot where they can have this. And again, I think it's just going to improve customer experience, which is really everything. All right, brands. We all know that Target has brands. They have a ton of brands. It's stuff that I've talked about constantly on this YouTube channel and on my other social media platforms. They saw an 18% growth over the course of 2021 in their owned brands. So brands that are, made and manufactured by Target Corporation. That is $30 billion in brand sales for their own brands. That's a big number. $30 billion is a massive number. I think what was thrown out there is that puts them potentially in the top 100 of the Fortune 500 in terms of sales. Crazy. Very crazy. And these are good quality brands as well. But of course, they also mix in with their national brands. We saw Apple, we saw Starbucks, we're seeing Starbucks now, Ulta, Disney, Levi was mentioned earlier. So again, they're deepening their relationship with big national other corporations, bringing them in. These other corporations see the value in Target, the value Target can provide to their brand, and they're also growing their brands alongside of it. Now, what does that do? It gives a perfect, yin and yang, so to speak. If you like Starbucks, if you like Ulta and the big name brands and Procter & Gamble and, et cetera, and you want to go in and buy those, you can. But you can also find a better value option via the Target made brand, whether that's Made by Design or Room Essentials or Heyday or Market Pantry for your food or Good and Gather. They're still very high quality, beautiful looking products. They never skimp on the aesthetic of products or the packaging of products. It's always top tier, especially in my opinion. I grab Good and Gather stuff over other brands constantly. Salsa, chips, ice cream, you name it. I'm grabbing Target's brand over other brands. That says something, but it also gives a spot for every single consumer and every single price range. And to tie everything kind of in a bow, the online experience, okay? Target Plus. This is something that I didn't know about before this. Let's say you're shopping on Amazon, okay? And you're scrolling through all of these different brands. You're not even sure where half these brands come from or what they're doing on the platform, but you're scrolling through, you click one, you buy it, and it shows up to your door. Fantastic, right? You just, that's the way Amazon works. But when you're utilizing the Target app or the Target website, you're very obviously expecting a Target-made product or a product that is sold in a Target. That is no longer the case. I'm not even sure how long this has been out. It's maybe just been that seamless, but you can now order some products directly off of Target that are not sold through Targets. Ray-Bans was the example they use. You go into the store, You see some sunglasses, but you want a more premium version, so you search them online, and boom, Ray-Ban shows up, but it's on Target's website. You go ahead and purchase the Ray-Bans. They don't fit you. You can return them at the Target store. But again, that product was never sold in a Target. Target is reaching out to brands that they like. Okay, this is that note of relevant assortment that Target likes, that Target trusts. They partner with them through Target Plus and sell their products on Target.com. It's much different than Amazon, who just lets every random person through the front door. Target's being selective. They're picking things they know that their guests and their customers would like. They're picking the relevant information, the relevant assortment. They're placing it on their website. This is, again, a win-win-win. The brand that partners with Target wins. Target wins because it's driving more demand through their website, and you as the consumer can now purchase through Target. This is easy. It's relevant. You can utilize your Red Card benefits on these products, so you can get 5% off of your Ray-Bans if you use your Red Card. Why would you not order through Target instead of ordering on Ray-Bans for 5% more? Get the 5% off. Order it through Target. And you can show up to your local Target and return it if you don't like it. Growth. It's all about growth. And improving these experiences. Again, we talked about their own brands. We talked about the way that they make relevant, good choices for their consumers. They're not letting in anybody random through the front door. They're deepening the relationship. They're redoing stores. They're remodeling both the outside and the inside of stores, building new ones in new locations with different sizes, different footprints. This is all added up to a 10% boost in their net promoter score over the last 2 years, which basically ranks you as the customer. But depending on your answer to the question, would you recommend this store, brand, or location, whatever it might be, to somebody else? If you fall in the top range of that, you are a promoter of the brand, of the company, right? You would recommend it. If you fall in the middle, you're passive, so you're not necessarily going to promote it, but you're not going to tell someone not to go there. And if you fall in the back part of it, well, then you're retractive. You're actually taking away from people visiting a Target location. You're telling them do not go there. 10% boost in that score over the last 2 years. It shows that what they're doing is working. And again, I already talked about it. The trusted and curated assortment of products matters. You're not scrolling endlessly through millions of options. You're seeing products and options that you like, that you would buy, and that you would recommend to other people. That matters. All right. Trying to wrap this up, the financials of Target. Let's get into it. So they mentioned this, and it was kind of the focus of their financial aspect of their presentation. They used to have a financial algorithm focused on sales, operating income, adjusted EPS, and after-tax return on invested capital. You could see here the expected kind of growth within each one. That is now being updated. The reason it's being updated, Target is a growth company. Emphasis on the growth. They're now measuring in total revenue. They're expecting about the same operating income, adjusted EPS, okay, again, the same sort of thing. CapEx. You can't expect to grow if you don't spend money. That was not verbatim, but close to what one of the members of Target's team had to say. And it's true. So they're going to start making capital expenditures, making investments back into the business. They're going to fund growth because you can't expect to grow without putting some money somewhere so that you can grow, right? Making investments. $4 to $5 billion in capital expenditures. This is, again, annually. They're focused on growth. And then the last one here, after tax return on invested capital. Obviously, if they want to grow, you got to have growth. They're expecting an increase from the mid to high teens to the high 20 to 30% range in after-tax return on invested capital. That's going to be this capital expenditures, the money they're investing back into the business. They're expecting to get returns on that money. Fantastic moving forward, considering these numbers, right? Obviously, we talked about it. A lot of demand got pushed towards Target with the pandemic. You can clearly see that here. 2020, massive spikes. And again, not quite meeting those same 2020 expectations because everything was pushed so hard forward in 2021. That's okay. Why is that okay? They're making these investments now. They're making these investments next year, the year after, 2024, 5, 6, okay? So we're going to start to see the payoff of those investments, right? Further down the line. I talked about scale. As they scale, profit margins increase. As they, scale and profit margins increase, they can make that return on their invested capital, reinvest the other capital, make more stores, get more stores as hubs, increase the sortation centers, continue to provide better updated looks for consumers, continue to get that return. There's so much growth potential after this sort of 2020, 2021, 2022, and even 2023, phase of the company, as you're going to see this massive push forward. You're going to see a dip in 2021. You might see a little bit further of a dip in 2022. And as you kind of bottom out, okay, you're not going to reach these numbers because they're investing back into the business. At least you hope you don't see these numbers. But as you fall, if you see my cursor here, maybe back into here, into this 7-8% range, the comparisons that you're going to be making to the business are going to fare well because you're going to exceed expectations because those expectations are now lower and you've made investments to make that difference up. You're not just, we're going to sit back and expect to grow and not do anything. You're investing money for the future and you're going to have poor comps relative to the 2020 years and the 2021 years. So I'm very excited for this growth. This chart, again, another staple piece as to why you should be so excited. Look at the revenue over 2019, over 2020, and over 2021. A 35% increase in revenue from 2019 to 2021. They increased the amount of store square footage by 1%, by 3,000 square feet. Or, I'm sorry, whatever number that is in millions, okay? But 1% might as well be 3,000 square feet. 1%. A 35% revenue increase with 1% physical store location increase. Why is that important? It's important because as you open more stores, you would expect more people to have access to targets. As you increase infrastructure like sortation centers, more stores as hubs, even some distribution centers, smaller footprint stores, larger footprint stores, you're getting access to more people, to more revenue, to more scale, to increase profit margins over time, and then boom, you're gone, right? You start to see the growth that you've invested for. This is, take a picture of this, put it on your wall, remember it. This is going to be important moving forward. Well, not forward in this presentation, but in the future. All right. And I make that comparison here. Target sits at number 7. This is that 2020 world retail sales. So there obviously the true number is this 93.6. This website has a 92.4. I'm not sure exactly where they got it, but this is the NRF, is National Retail Federation or something like that. You can find this. I'll probably leave a link to it in the description. Walmart rounded out at number 1. Okay. Look at that number. $543.17 billion in sales. Then Amazon, then Kroger, Home Depot, Costco, Walgreens. Target has $92.4 billion. And again, this is 2020. So this was a big increase for them, a big push forward. The amount of growth potential, if they could just snag Walmart's spot, that's 5x right there. Now, obviously, it's not, you don't get to just snap your fingers and be 5x. But look at what they're doing. Stores as hubs, sortation centers, right? Next day delivery. They're making the investments to grow to be like Amazon and Walmart. And then you take a look at Kroger, okay? Obviously, grocery. Big focus there on grocery. Target doesn't even touch the amount of grocery that Kroger does right now. They're working towards it. They're investing in it. They're remodeling stores for it. Their plan is to grow. And they have the comparisons to Walmart, right? They're identical in the sense that Walmart is just a bigger version of most Targets, but Walmart doesn't have the curation, attention to detail, and brand backing that Target does. Amazon, next day delivery, same day delivery in some cases, 2-day shipping on Prime. Target is working towards that with the scale potential to have next day delivery with sortation centers and potentially same day delivery and already technically same day delivery with Shipt. Kroger is focused on grocery, like I just talked about. The expansion of grocery through Target, through their own brands, and also through remodeling for, bigger areas for produce. You saw in the other pictures, potential for deli and meat markets, etc. They're working towards it. So the potential for that growth is there. It's going to take time and it's going to take investment. You can see here the market share of e-commerce. Target falling down to this 2% range. Home Depot, Apple, eBay, Walmart, Amazon. Obviously, Amazon is going to dominate this market, and they will probably continue to dominate this market, but there's a lot of room for growth. Target sitting at 2%. If they could touch Walmart, right? If they could even have a sniff at Walmart because of the new investments they're making, that is a ton of market share gained. And potentially, if they're snagging parts of Amazon's market share through that next day delivery, it's even more. The growth potential is still there. Target is not, I think really what I'm trying to get across here is Target is not capped out by their size right now. They're not too big right now. They still have potential for growth, and they see and recognize the fact that that potential is there, and they're investing for it. And to continue to stay semi-bullish here on the company, in terms of me being a dividend investor, is really this quarterly dividend and the share repurchases. Massive. They're going to look at doing $7+ billion in share repurchasing, and they're going to look to continue their 51 consecutive years of dividend growth by adding on the 52 and having a 20 to 30% increase in their quarterly dividend per share. Now, these other ones we've already kind of talked about, so these two are really what I wanted to focus on. That tells me that they're going to keep up their history, invest for growth, and pay me dividends all at the same time. This is a dividend growth company. This is a company I love moving forward. They do recognize that there are some factors that are going to influence. They mentioned that they think that the tailwinds and the headwinds are kind of going to cancel each other out moving forward. So they hope that really by, the negatives that are coming forward in terms of supply chain, cost pressure and inflation, potentially the decrease in the amount of stimulus money that Americans have, that met with the fact that they're investing for growth can kind of continue to kind of knock them forward into the future and push that growth. We will see how that plays out. Obviously, these are going to be some pretty tough things to overcome, but I do have confidence, right? I mean, they talk about the hardness and the persistence of American consumers and the fact that they constantly push through and push forward, and they are a tough crowd. I think that will hold true. And again, Target doesn't just sell luxury items that nobody needs. They sell groceries. They sell deodorant and toothpaste. And they have CVS's inside of them. They have these things that consumers are going to need, right? A little bit more of consumer defensive. Sort of consumer staples, right? Like these are products that people are going to need to buy. They're not just going to not show up to Target to buy them. Now you do have iPhones and headphones and garden hoses and things that people potentially might not need moving forward. But again, that good mix is there. And when you walk into a Target, don't lie to me and tell me that you don't walk around the whole store. I know that you do. I know you do. So that's about it. That is all that I have for this presentation. I say all that I have, and I've probably talked for about 30 minutes. I'm going to go back up to the top of this just to round out the presentation. So that was my thoughts here on the 2022 financial community meeting. I know this was a long video. Again, all of the information can be found here on Target's investor page. Let me go ahead and open up the home thing as I close out this video. So again, I want to say thank you for watching this video. I know this was a long one. I hope you're able to put it on 2x speed and just listen and get all this information. Go ahead and check out their investor page. Check out what I talked about at the beginning of the video. Listen to that webcast and go through the slide deck. I think that you'll be extremely impressed with what they had to talk about and offer. And I hope that I provided some type of insightful information. Take a look at Target stock. I think it's going to be interesting going forward. This is not a buy, sell, or hold recommendation, and it is not investment advice. But what it is a ton of information on a company that I enjoy. So hopefully you're able to learn something. Hopefully you have a Target run and done experience here. And I hope that you all have a great day.